Price is moving higher, but structure has not changed. Session boundaries are still defining behavior. And that is the first condition that must be understood. Now we begin with the most recent sequence. The March 19th U.S. session formed between two prior structural references. It developed between the midpoint of the March 9th U.S. session and the mid-region of the March 12th U.S. session. From that position, price moved upward. It tested the upper boundary of the March 12th U.S. session. This looked like continuation, but continuation did not persist. The move reached the boundary, but it did not hold above it. And that is the key distinction. Distance was created, but it was not maintained. When distance fails, price returns into structure. Now, the March 19th Asia session formed. It did not form outside structure. It formed inside the March 12th U.S. session box. This is compression, not expansion. When sessions form inside prior session boxes, interaction increases, and interaction reduces usable distance. Now observe what happens next. Price moved toward the lower boundary of the March 18th Asia session. This is not random. This is structural interaction. Because price is moving between known session boundaries. Now the March 20th U.S. session forms. Its body aligns with the prior Asia session box. This confirms overlap, not separation. When session anchors align like this, structure becomes dense, and dense structure changes behavior. Moves appear, but they fail faster. Pullbacks extend deeper. Continuation attempts stall earlier. This is not directional weakness. This is structural compression. Now observe volatility. During the U.S. session, the 20 Bollinger Bands flatten. Upper and lower bands lose slope. This indicates equilibrium. But equilibrium does not mean stability. It means balance inside compression. Now observe the next shift. The March 22nd Asia session forms between two higher time frame boundaries. Between the upper boundary of the March 3rd U.S. session and the lower boundary of the March 9th U.S. session. This is a corridor, not open space. From this position, price attempts to move higher. It moves above the upper boundary. But again, the question is not movement. The question is persistence. If persistence does not form, the move returns. And that is the pattern we continue to observe. Movement without holding. Expansion without relocation. Now we define the environment. Sessions are overlapping. Volatility is unstable. Distance is inconsistent. And structure is not relocating. If compression continues inside these overlapping session boundaries, distance remains limited. If persistence begins to hold outside this range, structure begins to shift. Execution conditions remain in transition. Now we move from observation to execution, because understanding structure only matters if execution adapts. And this environment requires a different execution approach. First, we define the key structure. The March 12th U.S. session boundary remains a dominant reference. Price continues to test it, but fails to hold above it. This creates a repeated rejection condition. Now consider the lower side. The March 9th U.S. session boundary acts as a lower reference. Price interacts with it, but does not break cleanly below it. This creates containment. Now between these two boundaries, price forms multiple session anchors. March 19th U.S., March 19th Asia, March 20th U.S., and now March 22nd Asia, all forming inside the same structural corridor. This increases interaction frequency. And when interaction increases, execution must change. Continuation trades lose reliability, because continuation requires distance. And distance is limited here. Now we bring in the second axis, volatility. The 20 Bollinger Bands flattened during the U.S. session, then expanded unevenly during the Asia session. The lower band expanded more aggressively, then began to stabilize. The upper band expanded briefly, then contracted. This is not stable expansion. This is unstable volatility. and unstable volatility produces false continuation. Now the third axis. Position. Price is not operating outside structure. It remains inside session boundaries. This means location is neutral, not directional. Now the fourth axis. Pressure. The slope is inconsistent. It shifts between flat and slight directional bias. This indicates that neither side has established control. Now the fifth axis. Liquidity. Liquidity activates at boundaries, not in the middle. So execution must shift to edges. Now we define the execution framework. If price approaches the upper boundary of the March 12th U.S. session and fails again, then rejection continues. This is where short execution becomes valid. Not in the middle, at the boundary. Now consider the lower boundary. If price approaches the March 9th U.S. session region and stabilizes, then rotation continues upward. This is where long execution becomes valid. Now consider a third condition. If price holds above the upper boundary with persistence, then the structure shifts, and distance becomes available. But until persistence forms, execution remains rotational, not directional. Now we connect behavior to structure. Moves extend, but fail to hold. Pullbacks deepen. Continuation stalls. This is the signature of compression. And compression requires patience, not reaction. Execution conditions remain in transition. Now we define what happens next. Because structure is not static, it evolves through interaction. The March 22nd Asia session introduces a new condition. It forms inside a higher timeframe corridor, then attempts to move beyond it. This creates a test of persistence. Now the key question becomes simple, not where price moves, but where it holds. If price holds above the upper boundary, then interaction frequency decreases, and distance begins to expand. This creates expansion. Now consider the opposite. If price fails to hold above the boundary and returns into the corridor, then compression continues, and the range remains intact. Now consider the lower side. If price breaks below the March 9th U.S. session boundary and holds, then structure shifts downward, and the prior range becomes resistance. Now we define the three conditions clearly. Upward persistence, continued compression, downward relocation. Each condition defines a different execution behavior. Now we connect this to the 5 axes. Time shows overlapping sessions. Volatility shows unstable expansion followed by contraction. Position shows price inside structural boundaries. Pressure shows lack of directional dominance. Liquidity shows activation at edges. All 5 align. This is not a trending environment. This is a transition environment. And transition environments create the most confusion, because movement appears strong, but structure remains unchanged. Now the final insight. You are not trading movement. You are trading acceptance. Acceptance is defined by persistence. Persistence is defined by holding beyond structure. Until that condition appears, structure continues to dominate behavior. Execution must remain conditional, not reactive. Execution conditions remain in transition.